What's going on, boys? How you doing, Gurvinder, Christian? Let's just get right into it. Super boring day, guys. It's very hard to trade today. Probably best to just take it off and leave. Obviously, there's a couple plays I did that were just looking back in hindsight, they weren't that smart. It's too many headlines, too much stuff going on, too much news to be trading right now. T crushed it. He absolutely crushed it. So congrats to him. Other than that, I didn't really do any that much today. Took a couple small positions, didn't really work out. SPY. So if you look at SPY right here, we opened today. Let's go to the daily chart. Open SPY today was at 439.92. We closed at 439.05. A grand total of about 80 cents movement today. What's up, Ginger? What's up, Dhruv? Papa Ganush? Just super choppy day. Nothing really here. So if you guys looked at the newsletter, I drew this range out based on what happened in 2018. So let's go check out 2018. If the same kind of move plays out that played out in 2018, well, those lines are wrong. It was like this and like this. I believe we're in this part of the play right now. So basically what I'm saying is we could be range bound for about another month. It's possible. Let's see day to day what happens, but right now everything does point lower. We have a huge move down possible all the way down to 421 if it does play out the same way. What's up, Andrew, other Andrew, G Money, what's going on? Um, Other than that, it's just super choppy trading, rough trading. Like the title of the post market today is trading versus gambling. Right now, there's no clear direction. People like Christians asking me gap up or gap down tomorrow. I have no idea at all. They might gap it up to stop out late put buyers. They might gap it down. Like there's no telling what tomorrow brings, especially with these candles. You can go to the daily. It looks like lower. Everything looks like lower, but there's so much chop today. There was no clear direction move. You look at the 4 hour here. 4 hour on SPY is getting a little oversold here. So all the technical indicators right now, stochastics are right at the bottom. RSI is near the bottom. So every time you guys see like RSI and stochastics are down here, it's due for a little bounce, but let's see what happens. Maybe a bounce tomorrow and then dump on Wednesday. That's another possibility. What's up, Ricky? How you doing? But for right now, it's so choppy. There's so much news. The Fed, the war, the OPECs, everything. It's so much chop. It's probably best to even take this week off or play very, very small. QQQ, same story. Tech was strong in the morning when financials were weak in the morning. And then financials bounced, and then tech came down, and then financials went a little bit higher, and then tech went a little bit higher. Like it was just complete chop, guys. If you look at the daily candle on QQQ, it's almost the same as SPY. We opened today on QQQ at 346.49. We closed at 347.49, so a dollar move up overall on QQQ. Chart looks like just broken, guys. Like a bunch of these charts are just super broken. How can someone tell you this is the bottom? How can someone tell you this is the top of the bounce? Like there's no one that can tell you that, right? No one knows what's going to happen next. XLF was continued weakness. So one thing I do like about these bank puts we have is XLF has a nice little double top forming here. And just going on previous patterns, guys, last time we got this extended off the 8-day moving average, it not only came down and touched the 8-day, it went sliced right through the 50-day all the way to 200-day. So if we get a similar move to this right here on financials, you can expect XLF to come down to about 38. So let's keep a close eye on that one. IWM again, bear flagging. Could not get through that 207.50, which is a key support all the way from January. Now it's turning into resistance here. So let's see if IWM can get back down to this move. Like I said in the newsletter, it could come down all the way to the 194, 193s here just to complete the bear flag. And if it does want to break the bear flag, much lower than that in my opinion. Let's keep an eye on that one. SPX failed to close over 44.10. That was a key level for me here. Every time we got up to it in here in the end of the day, just kept rejecting, and VIX came down a little bit, but again, on the overall bigger picture, VIX is just making higher lows and higher highs like I've been telling you guys. So right now, that daily candle on VIX is ugly. That's why I'm saying maybe Tuesday bounce, Wednesday cut. Yeah, today was super hard, Carlos. It was for everyone except T. T crushed it. For myself, I just wasted a lot of time. There's like nothing to do here. SE completely destroyed. India banned one of their businesses, and we were down on SE 18% today. So basically that whole higher low, higher high pattern got destroyed today. They brought it down almost to test these previous lows. Previous lows are at 119. So we touched 127 today. So if SE goes down a bit more tomorrow, we could maybe look for a double bottom at 119, but for right now, the chart's broken again. We finally had some bullish momentum. They were finally trying to change the trend, put in higher lows and higher highs, and then all in one day, they gave back all that work they did, and the sell volume was huge today. So SE probably not a candidate for calls for a long time, unless we do double bottom at this 119, and it shows some buyers show up at 119.41, this double bottom. Other than that, it's just an ugly chart, completely broken. And now we can get rid of all this bullish. All the bulls tried so hard for weeks trying to put in higher lows, higher highs. And the bears broke it right back down again. That one piece of news. So let's see where SE goes from here. But for right now, I'm not interested in calls. Pins also, we're sitting in calls. We need news on pins. This chart is also very, very ugly. The thing I see on pins is $26 level is a big level on pins. Until we close back above $26, it's going to be hard for any type of bullish momentum here. What's up, Yash? And we did close below it today. So let's see if we get some news, some kind of catalyst. Something is needed on pins to get it back above 26 and back in our favor. Tesla, very odd trading. This morning's ripping with the yields ripping with everything else weak. I don't know what that was, but Tesla, complete ripper. It looked exactly like Thursday. Last Thursday, what Tesla did is right here. So you see from the morning, gap down, big rip, failed to get through my gamma level. Remember, that was the day I was saying 945. Came right back down, tested low of the day, and actually closed below the low of the day. So today, we're a little bit better. I mean, we had that gap, kind of a gap down, well, sideways open. Big rip beginning of the day, gave it almost all back right here, but we did not roll over into the end of the day like last Thursday. So that's something to keep an eye on. I mean, not too interested in Tesla's overall chart here. If you look at the daily or the weekly, it just looks like chop here, guys. It's just getting tighter and tighter around here under 900. Let's see what the next move is. If the market continues weak, we'll most likely get a 200-day touch at least on Tesla, which is at 824. So watch that line, 824, and watch how we act around there. 824 is key. That's a 200-day moving average. If we bounce off it strong and hold above, that means the bulls are defending that level like they did here. We can have a big move on Tesla. Other than that, I do expect 824 to get touched. If the market continues weak like this, I do think we go and touch the 200-day on Tesla. BAC, so this one we do have puts in it. Up, down, up, down, up, down. Like, it's, the market is just crazy. This is a perfect double top here. Absolute perfect double top. And we're just rolling over now. Last time, if we get the same type of move that we got last time, there's a big dump coming. It came all the way down to the 200-day, which would put us around 43. I'm not looking for that much in a week unless the market completely dies. But for right now, we closed at 47.42. The 21-day moving average is at 47.36. So for today, it defended the 21-day moving average. Tomorrow, we're looking for a close under the 21-day. If we get a close under the 21-day tomorrow, we can come and test this $46 level, which is the 50-day moving average. That would be my target on the puts. NVIDIA, we got earnings on Wednesday, so this price action doesn't really matter. I mean, earnings will dictate if it's going to go up or down in the intermediate term. And right now, if you zoom out on NVIDIA, where we rejected was very bad. We have this bear flag, broke down on Friday, retested it today, so NVIDIA looks like it's going lower unless they absolutely smash earnings and the market turns around. NVIDIA does look like it wants lower as well. So let's see what they say on earnings. I do expect them to have good earnings. I mean, AMD crushed it. I think NVIDIA shall as well, but let's see how the market sentiment is after the earnings. Microsoft looks like death again. Big down move, rolling over that little H pattern I showed you guys, like straight down and then bit of consolidation, bear flag, and then breaking down again. Right now, the 200-day moving average is at 295.56. We closed under the 200-day moving average on Microsoft after a very long time. Other than this little close here on January 25th, on Microsoft, close under the 200-day. Before that, we haven't closed under the 200-day since COVID, guys. So that's something to keep an eye on. Remember that Microsoft is one of the leaders of the market. This closing under the 200-day definitely does not bode well for the market. Unless we bounce tomorrow and close above it, I think continued downside on Microsoft. So good luck on your puts. I know a lot of people took them in here. CRM is actually playing, like, right now, I think we're making lower lows on price while the RSI is moving up higher highs, higher lows, sorry. And when that does that, it means the price action is running, the sellers are running out. Sellers are running out and they're trying to reverse this and the momentum switching to the upside. And one thing I wanted to point out just for RD, because he asked earlier. So for NVIDIA, this play right here, when it was back here, so everyone knew NVIDIA earnings were February 16th. When I seen the price at 1.88 for the 300 calls March 4th, usually when a stock as volatile as AMD or NVIDIA or these semiconductors that can make huge moves in a week or off earnings, they usually have a lot of premium put into them for their earnings. When I initially bought the NVIDIA 300 calls for March for $1.88, the market maker did not put premium in there. They're too cheap. Like, that was way too cheap, even though it's a month out and a lot, like $50 out. NVIDIA is perfectly capable of making a $50 move off earnings. Like you guys see here, on this day alone, NVIDIA went from 271 to 313, which is almost a $50 move in one day. And it's done this a lot of times. You can see here this hanging, this little island candle. It went from 280 to 302. That's a 22-point move off nothing. And like stocks that are volatile like this, usually when they have earnings, they can have premiums added a little bit too late. If you can catch them on time, like this one, I bought it for 188. The stock wasn't even up that much the next day, but the premiums, they added the earnings premium into them, and they went from 1.88 to 550 or something. So that's the same type of play I'm looking for on CRM. Like the earnings aren't until March 1st, I think. We're looking at March 18th call. So even if we get a small run up here, the market maker should add a lot of premium just based on the earnings. So that's the type of play I was looking for on CRM. Let's see if we get some continuation off this bottom here, especially with the RSI moving up a little bit. Let's see if we get some continuation, and I'll try to get back in again. Right now, there's just so much uncertainty. I'd rather sit cash and just scalp this week, and then we'll see what the market direction is next week. Like, we don't know if the lows are in. I doubt the lows are in, to be honest. But do we get a big rip before the lows are put in, or do we just go straight down slowly? AXP, so one of the strongest charts since January 25th. They had amazing earnings. They went on a killer run, right? You look at the weekly chart here, 3 weeks straight up in a line. And then last week we had this little shooting star candle, which means it's a lot of people took profits at the top here on AXP. So the next move also you have to watch is the weekly. Whenever the weekly gets too extended off this 8-day moving average, it usually either goes sideways down or like straight down to recollect these moving averages before grinding out higher again. You can look back in the history of AXP. Every time it gets a little too far off the 8-day moving average, it always pulls back into the 8-day moving average. And this is true for a lot of financial names. Sometimes you just have to sit in them and wait. It takes longer because they're bank names. They move slower. But like you guys see here, it's just way too far off the 21-day as well. So whenever it's far off the 21-day, you guys see here, big like 8-day reversal. Where else was it? I showed it last time as well. You see here, we were far off the 21-day, big reversal. And stocks usually overshoot to the upside and overshoot to the downside, and then they find their way back to the mean. So that's what I'm looking for on AXP right now. If we get a close under the 8-day of 190.27, we should get a move down to at least 182.52. Does it happen this week? I don't know. Does it happen next week? I don't know. But I'm trying to get out of those this week's with more profit because we did take profits on Friday. If we get that close under the 8-day moving average, I'm pretty confident our play will play out just as expected. HD from the newsletter, I'm watching very, very closely as well. It's right now, I said either 351 rejection, or if we rally back to the bottom of this bear flag, which would be ideal. If we rally back up around this 362, 363 area and back test this and fail, then puts would be absolutely perfect on Home Depot. So right now I'm waiting. Today we held the 200-day moving average, which is at 347. The low of the day was around 347, and we held it, and buyers showed up. So we closed green on HT today. Let's see if we can get a better entry for puts, but I do like this one for puts in the future. Another one from the newsletter was Costco. Let's check this one out. Also on the daily, you guys see the stochastics are starting to curl down. So we lost all the moving averages. If this one continues weak, and Walmart earnings on Thursday are going to be big for Costco as well. If Walmart absolutely crushes it, this one can go up a lot as well. If Walmart misses, then look for more downside in Costco as well. We got Disney as well. We'll keep an eye on this one. Disney does have a gap to fill all the way to 147. So keep an eye on Disney as well. Continued weakness in the market. This one should go back to at least 147. Closed today around 151. So let's see what the market wants to do. And remember, guys, it's OPEX. Play small or don't play at all. You don't want to be taking full size positions in this, especially when, like, guys, there was like 14 news headlines today in the span of an hour, and they, like, what are they even saying? Like, this was normal. This is normal OPEC stuff. Big rip, big dip, then another big rip. Then news started coming out, way down. Failed to break out of that bear flag. Good news came out, rip back up. And then I think more bad news came back down, then just kind of chop. Like, how are you supposed to play this, right? It's just tough to play in this, guys. And we can check out ASON too. This guy, the ASON CEO, just keeps buying shares over and over and over again. Looks like one of the strongest stocks today. Up 11.5% today. Closed above the 50-day moving average. Looks like a bull flag breakout. Target for this one, if you're long, would be the 200-day moving average around 77. Another one that was strong today was this Z. Up almost 5% today in this kind of market is pretty remarkable. Closed above the 50-day moving average as well. So let's see if these two names can get follow through. Definitely two of the stronger names on my watch list today. Shopify has earnings coming Wednesday. This one is still in that higher low, higher high pattern like what I showed you on SE. So we put in the low, we put in the lower high, higher low, and now we need to go and take out this high of 988.50 to really start this bullish change in direction. Other than that, I mean, guys, it's OPEX week. Don't be gambling too much. I mean, we've made so much money in the last 3-4 weeks. There's no reason to give it back on weeks like this. Wait for A+ setups. Wait for your type of setup. If your type of setup doesn't come, then just leave it. You don't need to play it. I will see you guys tomorrow. Thank you guys for attending.